your business desk. Bankserv Africa, which is responsible for ensuring that payments systems in South Africa are safe, says inflation is eating into salaries as it has seen a marginal fall in the average take-home pay across the board in the month of March. The Bankserv Take-Home Pay Index was released today and shows that various market and economic factors continue to place financial constraints on companies and pressure on salaries paid by those companies. To find out more about what is happening with salaries in South Africa, we're joined by independent economist Elise Kruger. Elise, thank you so much for your time. According to this information that Bankserv Africa released today, the average salary after tax or take-home pay increased by 6.2% in the first 3 months of this year compared to last year. And then the index says if this continues, 2024 could be a better year for salaries. Is this a particular view enough on its own to base this prediction that 2024 could be better for salaries?
Yes. So the Bankserv Africa data for the first quarter, I think, is quite encouraging in the sense that we have seen salary increases keeping up with inflation, and that was not the case in the previous 2 years. So the 6.2% is quite a good number for the quarter. I do think it's reflecting a somewhat better economic environment. If you look at load shedding, we've got significantly less load shedding compared to this time last year. And also overall, we're seeing a moderation in our inflation rate compared to last year. So last year, this time, we had about 7.1% on our headline. We're now down to 5.3%. So overall, inflation is moderating compared to the previous 2 years. And I do think, given that companies have already adjusted notably to the load shedding sort of challenge, we are starting to see a bit more life in the economic activity side, and companies are faring better this year compared to the previous 2 years. And that just opened up some opportunity or a bit more of an ability by companies to increase salaries.
And of course, if those salaries increase and 2024 is a better year, financially stressed households' spending ability and confidence levels could improve if that happened. But talk to us about the numbers. What is the average take-home pay or average salary after tax in South Africa currently?
Yes, currently it's just more than 16,000 Rand in nominal terms. That is the take-home pay. And that's for a sample of about 4 million salary earners in South Africa, the data that gets cleared through Bankserv Africa as a clearing house. So it's about 25% of the total, I would say, formally employed people of South Africa. So it is a fairly good snapshot of what you can think in the overall economy is the case.
But of course, Elise, the data released today shows that those salaries fell in March. What are the factors there?
Yes, I think in March, a couple of factors did impact negatively on economic activity, especially on the one side, we had a fairly weak Rand exchange rate. So the Rand has been, I would say, for the last 2 months at very sort of depreciated levels. That impacts on the economy in general in the form of higher input costs. We also have had sort of a fairly big increase in our fuel prices at the beginning of March. So those are all factors that also dampen economic activity in a month, if you look at it very short term. So I think that could have played a role in the slightly lower numbers we saw. And also, March was now the first month where we had our new first month of the new financial year of government, so you're thinking about tax rates and, that whole phenomenon of bracket creep that could have perhaps impacted negatively on take-home pay of some salary earners that maybe got an increase in the month and ended up in a higher tax bracket.
Let's talk about pensions. It seems that those who are in their twilight years are faring better in terms of their earning capacity than those who are younger. How are pensions faring with inflation, seemingly the big bugbear when it comes to salaries and incomes?
Yes, there the Banks of Africa data is quite interesting, Kalani, as we see that the private pensions index have kept up quite well compared to inflation, and that's a phenomenon of the past couple of years. And zooming into that a bit, we have looked at the sample of Banks of Africa pension payments and found out that it's predominantly reflecting ex-government employees. Now, there is something technical that I just quickly want to allude to, and that's the fact that the Government Employment Pensions Fund is a defined benefit fund. So it basically guarantees, ex-government employees a certain pension, irrespective of what is happening to markets, for instance. And there's also a rule built into that the pensions must increase by at least 75% of the movement in consumer price inflation in the preceding 12 months. So from that point of view, there's a bit of a buffer built into the pension payments for government employees, and that is what we have seen in the Banks of Africa data.
And finally, Elise, this data also signals that that purchasing power of pensioners is well represented, as you've just said. But it also signals that many companies are signing long-term wage agreements over 2 years, over 3 years. And it says this is good for employees. Why is that so?
Yes, that's a new phenomenon, especially if you talk about 5 years now. So we've seen quite a few 2 and 3 years in the past, but most recently we've got quite a few 5-year wage agreements that have been concluded, especially in the mining industry. So I think it's positive for employees from the point of view that they've got clarity about the cost increases, but for the employees as well, all these recent ones have been concluded around about 6% average wage increases over such a period of time. And if you think about South Africa's medium-term inflation prospects, we are thinking about 5.2, 5.3%. So that would mean that the unionized workers would all have at least almost a guaranteed real increase in their wages, and that would mean almost a guaranteed purchasing power that's preserved for them. That is specifically relating to unions. We haven't seen that sort of fairly positive scenario in the private sector elsewhere, but where there are unions and where they are quite powerful, we are starting to see really lucrative wage agreements for workers.
Elise Kruger is an independent economist talking to us there about the latest BankServ take-home pay index, which shows that salaries are struggling, at least in the month of March. Thank you so much, Elise, for your time.